The non-fallout is now being felt across Europe, with energy markets reacting sharply to supply risks in the Gulf. Europe relies on the region for a significant share of its energy needs, including nearly half of its jet fuel, and that exposure is now pushing costs sharply higher. Jet fuel prices have more than doubled to record levels, forcing airlines to cut flights and raise fares, especially on long-haul routes. While a temporary ceasefire has eased immediate fears, uncertainty remains high, leaving travel costs volatile ahead of the peak holiday season. The energy shock is now feeding directly into household expenses across Europe. Fuel prices have surged, with petrol and diesel climbing to multi-year highs, raising transportation and logistics costs across the economy. Energy bills are also set to rise, with forecasts pointing to a sharp increase in regulated tariffs in the coming months. Higher fuel and energy costs are pushing up farm expenses, from fertilizers to machinery. Prices are expected to rise significantly by year-end, even if the conflict stabilizes. The result is a broad-based inflation wave moving from energy into everyday essentials. Now, the impact is now spreading across key sectors of the European economy. Clothing prices are under pressure as manufacturers in Asia face rising energy and transport costs. Healthcare costs are also rising, with higher logistics and production expenses pushing up the price of medicines and medical supplies. And at the same time, persistent inflation risks are forcing a rethink on interest rates. Borrowing costs are already rising, with mortgage rates moving higher and lending conditions tightening. While government may step in with targeted support, the outlook remains uncertain.